I've got some good news. If you're a buyer using an FHA loan to buy a home, the housing landscape has changed. And for the first time in a couple of years, FHA loans actually have some leverage. So if you've been told that FHA loans can't compete in today's market, that information, well, it's outdated. But that doesn't mean FHA is the right move for everyone. So what I want to do is spend a little time and talk about why FHA is no longer the underdog, but at the same time, I want you to know the risk of using FHA in today's housing market. So the reality is, over the last couple of years, FHA loans have been looked at as weak offers. And the primary reason for that is perception. Because they allow a minimal down payment, they allow lower credit scores. Many real estate agents, many sellers out there see those buyers as less qualified. On top of that, there's this belief out there that FHA loans take longer to close, that the appraisals are more restrictive. In addition to this idea that FHA loans just fall apart for some reason. But the reality is, over the last couple of years, sellers have been flooded with much easier offers to choose from. That's because in a hot market, sellers could be picky. And in many cases, FHA loans didn't stand a chance, but that leverage is gone. And that's because the days of 10 plus offers on a home, waiving contingencies to get your offer accepted, are no longer as common as they were just a couple of years ago. In fact, many sellers out there today are just hoping for an offer. And that's because the market has shifted. Inventory has risen. Days on the market are trending up. And over 40% of homes on the market today have had some sort of price reduction. So the biggest difference between today and just a couple of years ago is that sellers are prioritizing certainty of closing over loan type. In fact, many sellers out there are just hoping to get an offer on their property. But with that said, that doesn't all of a sudden mean that FHA loans are better than conventional loans. It now just means that it's no longer a deal breaker, and in some cases, it's just as strong. So why is FHA stronger today than it was just a couple of years ago? Well, before I answer that question, I'd like to ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. And if you want to stay updated on everything mortgage and real estate related, please consider subscribing to the channel. So why is FHA stronger today? Well, the very first thing is that FHA loans typically have lower mortgage rates than that of conventional financing, usually by at least 0.5%, especially when you have a credit score lower than 680. On top of that, FHA offers more flexible guidelines. You can actually have more debt with an FHA loan than you can have with a conventional loan and actually qualify for more homes, which in turn means more buyers can likely get approved using FHA than they can with conventional. Another thing that's changed in this environment is people have realized that FHA appraisals aren't as bad as people have thought. In fact, most people realize that they have similar timelines to conventional loans, and in many cases, the things that people thought would get called out in an FHA appraisal aren't actually called out unless it's directly related to a health and safety issue. Now, the biggest thing with FHA appraisals that I've seen in my 20 years of experience of selling homes is often related to peeling paint. FHA appraisers have to call out peeling paint on any property when doing an FHA loan. But what I'll tell you is oftentimes, even when this is called out, it's an easy fix. All that has to happen is that paint is scraped off, repainted in those areas where it was peeling, and in many times that fixes the problem. But the biggest change and why FHA is so much stronger today than just a couple of years ago is the seller psychology has changed, right? Sellers are now starting to realize that buyers have more leverage in today's market. It's no longer the hot, crazy market that it was just a couple of years ago, where you could have issues with your home. In fact, you could be overpriced and you would still receive multiple offers on that property. And in those situations, the seller oftentimes wanted to go with the offer that looked the most appealing all the way around. They weren't necessarily going with the offer that had the highest price or the full cash offer or the offer that waived all the contingencies. They were looking at the full picture of the buyer, which is exactly what you should be doing as a seller. Back then, when you had two offers side by side, they were both offering the same price. They were both offering the same deposit, waiving contingencies, doing whatever, but one was putting 3.5% down using FHA and one was putting 10, 15, 20% down using conventional loan. The buyer that looked stronger on paper was the one that was putting down more money, even though that doesn't necessarily mean that was true. Maybe that borrower had lower credit scores. Maybe they were just barely skating in with their DTI, whereas the borrower with FHA had plenty of room on their DTI. Maybe the only reason they were using FHA is because of the minimal down payment, but otherwise they were a completely solid buyer. Well, unfortunately, a lot of these sellers were getting bad advice from their real estate agents. A lot of agents out there don't truly understand FHA loans. They only know what they've heard over the last couple of years, which is they're bad loans, appraisals are tough, they take longer to close, they're only for less qualified buyers with lower credit scores, and the reality is none of those have to be true. So in many cases, FHA was getting a bad rap. But the biggest difference between then and now is that homes are sitting on the market longer. There's more competition out there in today's market. Homes aren't selling in the first weekend. In fact, many sellers out there are having to do price reductions in order to stay competitive in today's market. So instead of the sellers now having the upper hand, buyers have more leverage. So if you're a buyer out there using an FHA loan and you're making a strong offer otherwise, outside of the loan type, you're still making a competitive offer with regard to price. Maybe you're asking for some concessions in today's market, which is completely normal. I'm seeing a lot of buyers out there ask for credits towards closing costs, ask for their agent's compensation to be paid, asking for different things, which again, a couple of years ago was not common because of how competitive it was. But now that's also something that has changed. But if you're somebody out there making a competitive offer, but the only difference is now you're using an FHA loan, well, that's no longer perceived as a bad thing. But with that said, I don't want you to think that there are no downsides to using FHA in today's market, because the reality is it's actually a little bit more risky today than it was a couple of years ago. And the primary reason for that is because you're putting less money down. Because homes have appreciated so much over the last couple of years, nearly 50% over a 4-year period of time, there's a really good chance that home prices stabilize. They perhaps move down in some markets, and in other markets where they're gradually increasing, they're probably just going up at the rate of inflation. So in real terms, you're not really getting any home price growth. So if you're somebody coming in with a 3.5% down payment and you have a shorter term time horizon, or if you're in a position just in a couple of years where you're financially strained and you need to sell that home, there's a really good chance that you could end up upside down on that property because you haven't paid down the principal enough, because part of your down payment got eaten up by the upfront mortgage insurance. Because remember, when you buy a home using an FHA loan, yes, it's a 3.5% down payment, but also remember, there's that upfront mortgage insurance of 1.75% that you're financing back into the loan in most cases. So your 3.5% down payment is getting reduced to about 1.75% or so of actual equity in that property. So in today's market, you have to think about exit strategy. You need to be thinking 5, 7, 10 years out in the future. And that's why I believe it's really, really important. If you're buying in today's market, you need to have a longer term time horizon. Not because the housing market is going to crash, but there's a really good chance that home prices move sideways, move slightly down in some markets. And so if you have that shorter term time horizon and you go to sell, chances are you're going to end up owing more on that property than it's worth, or you're going to have to walk away from that initial down payment you put into the property. I'm seeing a lot of people out there online talking about buying their first home using an FHA loan, and then they're just going to keep it for a couple of years, and then they're going to sell it, take that equity, and buy the next home. And in reality, that's great. That's what a lot of people have been able to do over the last couple of years. And I think if you're one of those people that has a longer term time horizon, if your only option is to buy using an FHA loan, then I think buying using FHA is a great tool to be able to get you into the housing market. In fact, I've had many clients over the last couple of years buy using FHA, and they've been in a market where the homes have appreciated. They've been able to refinance out of that FHA loan into a conventional loan, get rid of the mortgage insurance, and put themselves in a good financial position. And had they not moved forward with the initial FHA loan, they probably would not have been a homeowner today because they wouldn't have been able to save enough down payment fast enough to be able to get into the housing market. So if FHA is your only way into the housing market, then I think you just have to be smart about it. You need to make sure you have money in the bank outside of your down payment, outside of your closing costs. You need to be comfortable with where that payment is today. You can't be buying a home in today's market with the expectation that you're just going to refinance in a couple of months or a couple of weeks or a couple of years or whatever when rates go down, and all of a sudden it's going to become more affordable. You need to be buying with the idea that, hey, this is my monthly payment forever, and look at rates going down as an opportunity if it happens. And like I said earlier, you also need to have that longer term time horizon. Now, if you have all of that and you're thinking of buying and you want to use an FHA loan, there's a couple of things that you can do in order to help your FHA offer stand out. And the very first thing is you want to make sure you're pre-approved. Before you ever go out shopping for a home or putting offers out on a property, you need to make sure you've gone through the pre-approval process. Now, that's different than pre-qualification. Pre-approval means not only have you talked to somebody, but you've also submitted documentation. You've filled out a loan application. You've provided your pay stubs, your tax returns, your bank statements, all of that information. You've had your credit run so that the mortgage broker can analyze all that information and say, yes, you qualify. This is how much home you can afford to purchase, and this is what your payment, your closing costs, all of that looks like. Whereas on the flip side, if you just call somebody on the phone and you give them information over the phone and they say, yeah, you're good to go, without actually going through that process, then you're not actually getting pre-approved. And I would say that's one of the biggest differences in the people that we help here on YouTube versus some of the other buyers out there. We've helped hundreds of people over the last couple of years go through this pre-approval process and actually help them buy a home. So if you think you're in that position and you want to work with a team that has your best interests in mind, do me a favor and check that link in the description of the video. So now that you got the pre-approval done, that's the most important piece of the process when trying to stand out in today's market, when trying to put offers in on a property. Now, when it comes to actually writing an offer, I think you're in a market now, in many markets out there, where you can offer less than the asking price in many cases. You don't necessarily have to go in at the asking price. Now, that doesn't mean that you're going to be able to offer 5% less or 10% less or do something crazy out there. I still think you need to write clean, competitive offers, which means you need to come in with a strong price based on recent comparables in the market that you're looking. Remember, real estate is local, so depending on where you are in the United States, your market's going to be a little bit different. Here in Southern California, the market is slower, but there are homes out there that still get multiple offers, and there are also homes that sit for a couple of weeks, a couple of months. And that doesn't necessarily mean those sellers are going to accept something way less. It just means the market has shifted. And many agents and buyers out there have a very short-term memory when it comes to housing. They only remember the last couple of years. They weren't around when we had a more normal housing market. I've been selling real estate for over 20 years. So I've been in several real estate markets. And the reality is homes typically don't sell in the very first weekend. In fact, many sellers have to reduce the price over a period of time in order to figure out what the market's going to bear. That's a more normal market, and that's the market we're in right now. So just pay attention to the local data in your market. If you're in a market that's in the Northeast, those are still competitive. If you're in the market like Florida or Texas, those are less competitive at the moment. More inventory, less buyer demand, things aren't moving as quickly. You can probably be a little bit more aggressive in those markets, but I still think you need to make a clean, competitive offer. On top of that, in many cases, I think you can ask for a credit towards closing cost or a credit towards your agent's compensation, depending on how you have it structured. I think you're in a market now where you can be a little more aggressive as a buyer. Now, that doesn't mean you have to go in and completely waive contingencies, but I believe when you're going in making a more competitive offer for you as a buyer, you need to have your I's dotted, your T's crossed, where it looks like a competitive offer from the seller side to some perspective outside of maybe the price and the concessions that you're asking for, right? You don't want to go in and be super aggressive where everything just looks like it's benefiting you. A negotiation is where both sides feel like they're winning to some degree. So you want to come in with a competitive offer because in some cases, maybe you are competing against someone else. Maybe you are going up against a conventional offer in some cases. Where can you stand out? Which leads me to the next thing. Make sure you're working with a real estate agent that knows your market, that understands the changes in the current market, that can help you navigate this stuff, that can help you structure an offer that not only benefits you, but makes the seller feel like they're benefiting as well. Now with that, I've set up a network of real estate agents over my last 20 years that can help guide you through that process. They work exactly like I do. So if you're not sure where to start and you'd like a real estate agent that works like me, do me a favor and check that link below. Now the last thing I'll say about that is the terms of your offer matter more than ever. And loan type is just one piece of the puzzle. Again, this housing market is shifting and it's giving FHA buyers a real shot if you do it right. But do me a favor, don't just chase the house. You have to understand the risk, run the numbers, and ultimately make sure the loan actually fits your plan. If you need help walking through it, that link below will get you connected directly to my team. Now, after watching this, you think you're ready to buy a home and you believe FHA is the right loan for you, but you don't fully understand it, do me a favor and check out this video here.